Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know going into trade for 18th November 2020 in the international market. In US, retail sales rose 0.3% last month, below economists' expectation of 0.5%. Spending has been restrained by spiraling COVID-19 infections and declining household income as millions of unemployed Americans lost government financial support. The new fiscal stimulus package, handing out cash to millions of unemployed Americans, does not seem to be coming before January 2021. With retail sales hope fading, US Treasuries inched down and 10-year closed 4 basis points down at 0.87 and 30-year also was down by 4 basis points at 1.62. In the crude oil market, for the week ending November 13th, the American Petroleum Institute API reported on Tuesday a build in crude oil inventory of 4.17 million barrels versus analyst expectation of mere 1.95 million barrels. Also, with many states in US having restrictions due to resurgence of COVID-19, crude's demand in the near term in US will remain tepid. Crude is now trading at $43.56 per barrel, and our short-term range for crude is $42 to $45 per barrel. In the currency market, dollar index or DXY is at 92.50, pretty much unchanged from yesterday. DXY's today's range seems to be 92.25 to 92.78, a very narrow range. USD CNY or Chinese yuan is at 6.56 versus 6.58 yesterday. USD INR or Indian rupee with a high of 74.62 closed at 74.47 yesterday. USD INR's range for today seems to be 74.30 to 74.60. USD INR has closed below 74.50 yesterday, and if the closing continues below 74.50, then we expect USD INR to close around 74.30 today. Please note that there is a constant buying from RBI to drive rupee at 74.50 and above levels. In the domestic market, Indian bond markets have been stuck in the very narrow range. At 592, which is a good technical support, RBI seems to be supporting the market. At 585 and below, public sector banks are selling heavily. Hence, market has become range bound from 585 to 592 without any new material information which can change this dynamics. Talking about 17th November 2020 SDL auction analysis, 10-year Karnataka was auctioned at 649, Rajasthan at 654, Punjab and Assam at 660. The auction figures clearly states that the auction yields are now back to 650-660 levels. It seems we at Night Research were bang on when we had advised our clients to sell SDLs at 640-645 range and advised them to wait for 2 to 3 months before participating in SDL auctions again. The 2 to 3 basis point arbitrage play of auction versus secondary is very much possible, but that needs market liquidity to offload the stock, where Night Research with our deep industry connects can play a crucial role. 577 GS 2030 has outstanding stock of 1.23 lakh crore, which is above the informal cap of 1.2 lakh crore on any government security. We are now anticipating a new government security for 2030 mostly by next week. But as OMOs are happening frequently, 577 2030 will again be a good candidate, and hence traders would still love to hold this stock. We expect a range bound session today as well, and you should be using our intraday trading ranges for the quick profits. A quick watch out. Diwali season has gone and Delhi is already struggling with COVID-19 second wave. If this situation happens in majority of the country again and partial lockdowns have to be implemented, this will weaken the bond yields and the yields can come to 580 levels as well, depending on the COVID-19 scenario in India. Our research team is keeping an eye on the COVID-19 numbers in India and will make sure to update you in a timely fashion. That's it for today. You were listening to Night Snippets with Parthesh Shah from Night Fintech. See you tomorrow with the new episode of Night Snippets.